Hello there, fellow cryptocurrency enthusiasts. Welcome to another deep dive into the ever-exciting world of digital currencies. Let's be honest, the crypto market can feel like a roller coaster ride, full of thrilling highs and gut-wrenching lows. Ups, downs, and sometimes you just want to close your eyes and hope for the best. It's a wild ride that tests our nerves and our resolve. Recently, we've been on a bit of a downward spiral, and everyone's asking the same question: is this the dreaded crypto crash? Are we witnessing the end of the crypto dream? Now, before you panic sell your digital assets and swear off blockchain forever, let's take a deep breath and analyze the situation. It's crucial to stay calm and collected. Just like that time you tried to assemble IKEA furniture after a few beers, things might seem scarier than they actually are. Sometimes all it takes is a bit of patience and perspective. Remember, the crypto market is known for its volatility. It's a space where rapid changes are the norm, not the exception. It's like that friend who's always up for an adventure, even if it means jumping out of a plane with a questionable parachute. The thrill and uncertainty are part of the package, but just like that friend, crypto has a knack for surprising us. It can bounce back when we least expect it, defying all odds. So buckle up, grab your favorite beverage, and let's dive into the world of crypto and see if this dip is really a sign of the apocalypse or just a temporary setback. Together, we'll navigate these turbulent times and uncover the truth. Alright, let's rip off the bandage and look at the numbers. It's not pretty, but it's not a bloodbath either. Bitcoin, the heavyweight champ of the crypto world, has taken a hit, dropping by, insert percentage here. Ethereum, the smart contract superstar, is also feeling the heat, down by, insert percentage here. And don't even get me started on the altcoins, those smaller cryptocurrencies that are often even more volatile than their big brothers. Some of them are down by double digits, which is enough to make even the most seasoned trader sweat a little. But before you start digging a bunker in your backyard, let's remember that market dips are a normal part of the financial cycle. It's like the stock market, except instead of boring old companies, we're dealing with digital tokens that could revolutionize the world, or at least make online payments a bit easier. The key is to understand the market is dipping. Is it just a temporary blip, or are there larger forces at play? Let's investigate, shall we? Here's the thing about the crypto market. It doesn't exist in a vacuum. It's a dynamic ecosystem influenced by a myriad of factors. It's influenced by a whole bunch of external factors like global economics, government regulations, and whether or not Elon Musk tweets something cryptic about Dogecoin. His tweets alone can send shockwaves through the market. One of the biggest factors affecting the market right now is the overall health of the global economy. When the economy sneezes, the crypto market catches a cold, and let's just say things are a bit shaky. Inflation is still a thing, interest rates are rising, and there's a general sense of uncertainty in the air. People are feeling the pinch in their wallets. Remember that recent job openings report? It was supposed to be a beacon of hope. Yeah, the one that showed the economy was still creating jobs like a caffeinated rabbit. More jobs usually mean more spending power. Well, it turns out that good news can sometimes be bad news for the crypto market. More jobs can lead to higher wages, which can fuel inflation. Why? Because a strong economy could lead to higher interest rates, as the Federal Reserve tries to keep inflation in check. It's a delicate balancing act, and higher interest rates make it less appealing for investors to put their money into risky assets, like cryptocurrencies. They start looking for safer havens. It's like choosing between a safe, boring savings account that pays a decent interest rate or investing in your friend's startup that makes edible drones. The choice becomes clearer. When the economy is uncertain, people tend to go for the safe bet. They want to protect their hard-earned money. Speaking of the Federal Reserve, let's talk about those interest rate hikes, shall we? The Fed is like the stern but well-meaning parent of the US economy. They're always trying to keep things in check, even if it means making unpopular decisions. And right now, their main concern is inflation. They're raising interest rates to try to slow down the economy and bring inflation under control. Think of it like gently applying the brakes on a runaway train full of consumer goods. But here's the catch. Higher interest rates can also spook investors in the crypto market. When interest rates go up, it becomes more expensive to borrow money, which can make it harder for crypto businesses to grow and innovate. Plus, as we mentioned earlier, higher interest rates make safer investments more appealing. So, some investors might decide to pull their money out of crypto and put it into something more predictable, like government bonds. Section 5. Correction, not crisis. Riding out the crypto waves. Okay, so the market is down, the economy is uncertain, and the Fed is raising interest rates. It's a challenging time for investors and traders alike. It sounds pretty grim, right? The anxiety is palpable and the fear of the unknown is spreading. But before you start stocking up on canned goods and building a survival bunker, let's remember one important thing. This is not a crypto crash. It's crucial to keep perspective. Yes, the market is experiencing a correction. This is a natural part of the financial ecosystem. But corrections are a normal part of any healthy market. They serve as a reset button, allowing for sustainable growth. They're like a much-needed reality check after a period of exuberance. It's a moment to pause and reassess. Think of it like that time you ate an entire pizza by yourself and then felt terrible afterwards. It was a lesson learned the hard way. It wasn't fun, but it was a necessary reminder that you can't survive on pepperoni and cheese alone. Balance is key. One way to tell that this is a correction, not a crash, is to look at the number of trader liquidations. This metric can be very telling. Liquidation is when a trader's leveraged position is automatically closed because they don't have enough margin to cover their losses. It's a safeguard mechanism. It's basically a very polite way of saying, you've lost all your money. It's a harsh reality but part of the trading world. During a crash, liquidations skyrocket as traders panic and sell their positions at any price. The market becomes chaotic, but right now liquidations are elevated but not at panic levels. This indicates a more controlled environment. This suggests that while some traders are feeling the pain, most are holding on, hoping for a rebound. It's a test of resilience and patience. Section 6. Strategies for the storm navigating the crypto dip. So, the market is going through a rough patch. What's a savvy crypto enthusiast to do? Well, the answer depends on your investment strategy and your risk tolerance. If you're a long-term investor, this dip could actually be a good thing. It's like a Black Friday sale for crypto. You can buy your favorite coins at a discount and wait for the market to recover. Just remember to stick to your investment plan and don't panic sell. If you're a swing trader, you're probably used to the ups and downs of the market. This dip could be an opportunity to profit from the volatility. But be careful, swing trading is risky, and you could lose money if you're not careful. No matter what your strategy is, the most important thing is to stay informed. Keep up with the latest news and market trends, and don't be afraid to seek advice from a financial advisor if you need it. Section 7. Zooming out, the big picture of crypto's future. It's easy to get caught up in the day-to-day fluctuations of the crypto market. But it's important to remember that this is still a relatively new asset class. It's like the Wild West out there, full of opportunities and risks. Despite the recent dip, the long-term potential for crypto is still enormous. Blockchain technology has the power to revolutionize everything from finance to supply chain management. And as more people adopt cryptocurrencies, their value is likely to increase. Think about the early days of the internet. People were skeptical at first, but look at it now. Crypto could follow a similar trajectory, even if there are some bumps along the way. So, don't give up on crypto just yet. This dip could be a temporary setback on the road to mainstream adoption. Section 8. Keep calm in crypto on weathering the market storm. The crypto market can be a wild ride full of exhilarating highs and gut-wrenching lows, but just like that friend who drags you on questionable adventures, it's never boring. This recent dip might seem scary, but it's important to remember that corrections are a normal part of any healthy market. It's not a crash, it's a reality check. The key is to stay calm, stay informed, and stick to your investment strategy. Don't panic sell, don't make rash decisions, and don't listen to that guy on Reddit who claims to be a time traveler. Remember, the crypto market is still young and full of potential. This dip could be a buying opportunity for long-term investors or a chance for swing traders to profit from the volatility. So keep calm, crypto on, and remember, this is just another chapter in the exciting, unpredictable story of cryptocurrency.